Hi everyone, my name is CMA Lakhotia. Today we're gonna start with our very first lecture of CA or CMA Foundation. We're gonna start with a very basic concept of accounting so that anybody who have never heard of accounting before or taken CA or CMA Foundation after their 12th. So we're gonna start with very basic or scratch so it will be very easy to grab and slowly and gradually will take the pace. Okay. So we're gonna start with what is accounting. As you can see on my screen, what is accounting? What is basically accounting? See, we can start with the definition of accounting. According to American Institute of Certified Public Accounting, what is AICPA? Starting with a very hard word, we can say. So here in India, we have CA or CMA. In America, there's something called Certified Public Accountant. Why do I use that definition? Because it's the best definition of accounting, which will not only give you the definition but also the process of accounting and from for what the accounting works. It is the very basic and it have everything what accountant does from start to bottom. It have everything. So we're gonna start with American Institute of Certified Public Accountant. What is AICPA? Okay, we know now. Okay, CACMA of America. So accounting is an art. What do we say? Accounting is an art. Why do we say it is an art? Is it a drawing? Is it a painting? Is it what is it? Why do we call it as an art? So we call accounting as an art because we become perfectionist after we try it. It is a creativity. It is a judgment. See, if I'm a painter, I will not become an artist in one day. I'll try, I'll practice, I'll become something after doing practice and practice. So in accounting also, if you have to become a great accountant, great chartered accountant, great cost accountant, you have to have an art with you. You have to practice, you have to create, you have to have creativity, you have to have judgment, you have to have skills. So accounting is an art of recording, classifying, summarizing. Three hard words, huh? What are these? What are recording, classifying, summarizing of what? So we're gonna start with the word transaction and events. We're gonna go back to recording, classifying, and summarizing, but we're gonna start with transaction events. What is a transaction? What is an event? So for a simple accounting language, what we can say, any transaction, you go to a small shop near your house, you pay them money for a packet of chips. It's a transaction. Huh. You give them 10 rupees, they give you chips. So it's a transaction or an event. Got it? So in accounting, any transaction which happens have to be recorded. So what does it mean? See, any transaction have to be recorded. See, maybe I appreciated someone. So should we have to account that also? It's a transaction. See, maybe I'm paying my servant a 10,000 rupees a month. Got it. So it have to be recorded. I'm paying my servant 10,000 rupees a month. But if I'm not paying him, I'm just appreciating him. Okay, my servant is a very good servant. He cooks really good food, but it have to be recorded. No. How can we record? Ki this cook debit very good food credit. No, we can't, right? So any transaction and events which are in part at least of a financial character. What does it mean? Financial character, which are calculated in terms of money where money is involved. We can only record transactions which have money in it, which can be monetarily calculated. Why? We can't record an appreciation because it's a very good appreciation. We want to record it, but we can't. Why? Because any transaction or event having monetary consideration can be recording in terms of money. But we have to record everything. My mom go to a grocery store, bought something. So mom have to record that. Okay, I have purchased this much chana, this much dal, this much rice. No. So any business transaction, we have to record in accounting. So if I'm the grocery shop owner, If I've sold my mom dal and rice and all, I have to record that. But my mom is doesn't know accounting and all. Okay. So what we have to record? Any transaction in event having at least a financial character in terms of money. Okay. We are here right now. But what is recording? What does recording states? Recording means entering in the books of accounts. See what we can say right now in accounting, right? We have something called journal entry. See, any transaction happens. Maybe I have purchased some goods, any goods for the, it would have to be recorded. Okay, it have to be written down. So if you have any, if your dad runs a shop or a business or something, if he does anything, na, he have to record it. If anybody, if he purchase good, if he sell good, he have to record it. Why do we have to record it? So recording into journal entry. So it's a block of transaction. Maybe he's purchasing something, maybe he's selling something, maybe he's taking services of something, maybe he is paying to the government, the tax and all. You have to record everything. So it is called recording. It's the club of everything which you have to record. Any transaction event having a financial connector. We're gonna repeat that every single day because this is the crux of accounting. We're gonna start any transaction event having at least a financial character. We have to record it. We are recording it. Recording it into what? Something called journal entry. We're gonna go for journal entry next lecture, but we have to record it. Anything happens in a business having a monetary consideration, we're gonna record it. Recording in a journal entry. Okay. The second is classifying. Classifying is that whatever we have recorded, sort it out into different groups. Okay. If I'm purchasing something, I'm purchasing, maybe I'm a grocery shop owner. I'm purchasing some kilos of dal, some kilos of rice, some kilos of anything else which we sold. Okay. We're going to record everything in a purchase ledger. Okay. These are all purchase. If I'm selling anything, we're going to sort it out into purchase, sales, input tax, anything, capital. These are liabilities. This is all classifying. Classifying of transactions. Basically, if I'm in a group of class, okay, a class, we're a group of people, we're sorting out people. Maybe we're gonna sort it out as an, these are people having height more than 5 feet. So these are classifying. 4 to 5 feet. These are 4 to 5. 3 to 4 feet. These are. So classifying into different ledgers so that we can get something out of it. So maybe of lakhs and millions of transactions happening. Okay, we're gonna sort it out into different ledger. These are goods purchase ledger, goods sell ledger, input text ledger, any ledger. So these are called ledgers. So recording of transaction in journal entry by journal entry, classifying by ledgers. So these are purchase ledgers. Anything which are purchased by me. For I am a sports shop owner. Okay, if I'm purchasing cricket balls, bats, badminton, shoes, etc., etc., these all gonna go into my purchase ledger. Okay, so these are my purchase ledger. If I'm selling these shoes, these cricket balls, bats, badminton, football, anything, these are, I'm selling these now. So these are my sales ledger. If I'm getting any kind of utilities, these are going to my utilities ledger. I'm get purchasing electricity. I'm getting electricity for my shop to run my shop. Water utilities, any kind of, these go to my utility ledger. Why do I do these? Okay, so what are we doing? So any transaction in event having at least a financial character, recording it, then classifying it. So if you, the bunch of transaction we got into business, we recorded that, we then directly classify it into different ledgers. Why do I do it? Just to clarify, just to get in some results. Okay, we're gonna go to that. Okay, then summarizing it. What is summarizing? Another big word. We first got a bunch of transactions or events having a financial character, then we recorded it, then we classify it. Now we have to summarize it also. We are accountant, we have to do everything. Okay, this is where the game gets serious. What is summarizing? Summarizing, big word to hear, right? Summarizing is that whatever we get after that ledgers accounting, we're gonna summarize it into three parts, maybe more parts. Balance sheet, P&L. You have heard these words before, I know. Whenever we go to any Whenever we read any annual report, we're gonna just go and scroll to the what is the P&L showing, what is the gross profit, what is the net profit. Oh, we go to balance sheet, what are the assets of this company, what are the liabilities of this company. We're gonna make these ledgers into these. See, we are just sorting out things. There are a bunch of transactions. Okay, this much. Then we classify it into different ledgers to simplify it so that we can read it properly. Then these ledger get into summarized part, which is called balance sheet and P&L. Bunch of transactions or events having a financial character. I'm repeating it multiple times. Why? Because you have to understand what I'm getting telling you. Because these are the basics of accounting which you have to learn from day one and which will follow to you even if you become a CFO of a company. Okay, these are the basic. Then this is what we go. I'm currently working somewhere. Okay, but I have to do that. Even now, this definition helps me everywhere. Okay, so there were a bunch of transaction. We classify it into different ledgers and all. Then we summarize it into balance sheet, P&L. Got it? And many more type of statements, whichever is available. We have trading, we have operating, we have many types of cash flow statement, we have change in equity, we have notes to accounts, many transaction. I don't want to get that bifurcated here because we want to consolidate into a summarized manner. Okay, so what we started with, we have accounting is an art because we can become a perfectionist after practice and practice. We have to get our creativity out, we have to get our judgment out, skills out to get there. Have transaction in events having at least a financial character, we get to record it, we got to classify it, we got to summarize it. But after summarization, we have our balance sheet, we have our P&L. What do we do with that? We have we have summarized it into significant manner. Okay, we get it. In terms of money, I've told you before, we can't record non-monetary things. Ram, my servant, is a very good person. I paid him 10,000, I can record that. But that very good person, I can't record that. Ki Ram account debit to good person. No. Ram, I pay money to Ram. I can record that. The money, the monetary part is we can record. So the terms of money is very, very important part. We can't record non-monetary things at all. Have that in your mind. Okay. But after making balance sheet, after making P&L, what we gonna do with that? We're gonna take decision interpreting the results thereof. The last line. What does it? It's a very small word. It's a very, very, very large content. Why? This balance sheet and P&L, we're gonna take decisions. This is what we have to do. As a cost accountant, as a chartered accountant, this is what our basics do. We're gonna start with who take decisions. Who? We're gonna communicate. See, this balance sheet and P&L. Firstly, our boards, not our central board examination. We have gone over at 12th. Okay, our board of directors, our company internal auditors. We're gonna give this to government, who gonna charge tax on this. So we're gonna communicate these results to different people, our stakeholders, our equity shareholders, who gonna take decisions for us. To different people. See what we got. We got bunch of transition events. We summarize it to different GLs, different ledgers. Then we just summarize it into different statement which are readable for a normal layman language public. For stakeholders, our equity shareholders, our government, many more people, our debtor, our creditor. These terminologies we're gonna go after some time, but many more people read this to get informative decision. This is what called interpreting the result. Interpreting, what does interpreting means? After that summarization, what if my company is growing, if my company is drowning, what are the major goalies? What is goalie? Growth over last year. What are our major variances? What are the area we have to look for? What are the area we are drowning in? Okay, this is interpreting. So what we started with, accounting is an, just I'm gonna clear this. Give me a second. Accounting is an art of recording, classifying, summarizing in a significant manner in terms of money, transaction events, which are in part at least a financial character, and interpreting the result thereof. We got it? Very small definition, but having everything. You are a fresher. You just started chartered accountancy, cost accountancy. You are a qualified one. You are a CF of this company. This is what an accountant does. Nothing more than that. This definition summarizes everything. If you learn it by heart, you know everything about accounts. This is where, this is our forte. This is what runs in our blood. Okay. So what do we get this from this definition? This is a very summarized part. Accounting is an art. Why does it is an art? Creativity, judgment, and skill. What we had? Creativity, judgment, and skill. I don't have a good handwriting to have to understand that. Recording, I told you before, recording into journal entries. We have got bunch of transaction and events. Classifying into different ledgers, purchase ledger, sales ledger, input tax credit ledger, any type of ledger. Summarizing it into balance sheet, P&L, cash flow statement, any other type of statement which can be readable in layman language and layman public can understand whatever is written in that. Transaction and events. Transaction and events. Anything, any transaction happens between two persons. I purchased a 10 rupees Coke bottle. For that person, he sold. So it's a monetary. I paid my son 10,000 rupees. Monetary 10,000 in money. In money. Always remember that I'm just emphasizing on this word because you can't record a non monetary transaction even though you want to. Okay, you can't. Whenever money is involved, you can record it. Okay, but not anything else. Having at least a financial character. Financial character, I told you, business transactions are recorded. Okay, nothing else. Interpreting the result. Interpreting, who will interpret it? Our company, our board of directors, our stakeholders, our equity shareholders, our debtors, our creditors, our government, anybody who can read have to interpret it the result. That's why we, as an accountant, summarize it into that simple manner that it can be interpreted. So what we get into this from this definition is what is, just a second, I'll just, and this is what the process of accounting says. The definition of accounting is what the process of accounting says. We have learned the definition, we have learned the process also. Firstly, identifying what does identifying saying? Identified business transactions. We can't record non-monetary transaction. We have to record business transaction. We can't record everything. Okay, my mom go to any grocery shop, my mom purchase anything, my mom won't record anything, right? We have to record business transactions. Measuring in terms of money. We can't record anything which is not in money. Money is important. पैसा तो मांगता है. Money आएगा, we gonna record that. Recording into journal entry. We're gonna get into journal entry next lecture, I guess. Heart of accounting, heartbeat of accounting. If you have learned these accounting parts in 11th term, this is very easy for you. But I'm going to start with the very basic because there will be some guys who must have forgotten that, or some guys who have started from the 12th, from after 12th itself. Okay, recording to journal, then classifying, grouping the similar items under one head. Sales, purchase, tax. Got it? बहुत easy. Very easy, we can divide. It's a very layman language I'm getting you to, right? Summarizing. Summarizing into profit and loss, balance sheet. Didn't you feel we have already learned everything? We know the process of accounting now. We just learned the definition. It is everything same. Why? That's why I chose the CIPA definition. It involves everything. This is where the accountancy runs. Okay. Business and profit and loss for business balance sheet shows the financial position of the business. There are two types, two things. One is called financial position of business. One is called financial performance of business. We're gonna go into that in deeper in next lecture. We're gonna go deep into that in next lecture. But this is what it is. Okay. Analyzing and interpretation. What does analyzing and interpretation means? Meaningful judgment. We summarized our balance sheet or P&L into very layman language when we can take meaningful business. Our business is going up. We can invest here more. Our business is going down. We can disinvest in this particular thing. Our cost is increasing. We can reduce this cost. Our cost is in par. We can improve there. We can get into there. This is a good chance of demerger. This is a good chance of merger, acquisition. What? How can he take this big decision involves millions of crores rupees? By interpreting the balance sheet and P&L, the financial accounts, starting from that bunch of transaction, we are taking to mergers and acquisition. How? This is called accounting. Okay, and communicating. What do we? After interpreting, we have prepared balance sheet. We have prepared our P&L. We're gonna communicate. Whom? I'm gonna communicate the government. I'm gonna communicate debtors, creditors, our board, our equity shareholders, our shareholders, preference shareholders, anybody who are anywhere concerned of from this. If you're a listed company, you're going to list your figures, your auditors, your internal auditor, statutory auditors. So this accounting process is just nothing but your definition of accounting. We got into that field, right? We have started with. So what we're gonna do? I'm gonna summarize the whole lecture in next 2 minutes, but I just want you to repeat this definition for at least 3 4 days, and then you're gonna feel that I know this by heart. I don't want to rememberize it now. And this is from me. I just used to write this definition. Now I love it in any way possible. So we're gonna start it. According to American Institute of Certified Public Accounting. You wanna remember that? No, that part. But it's their definition. That's why I put in their name. Okay, accounting is an art. Why it is an art? It involves creativity, skill, judgment, and we became perfect after practice. So we have to practice in accountancy. Whoever practice wins. Got it? So accounting is an art. What do we do with that art? We identify transaction, right? What transaction we identify? We identify business transactions. I'm gonna erase all that first. We're gonna identify all the business transactions. Okay, what do we do now? After identifying those transactions, we're gonna measure that into money, right? Only money transaction we're gonna record. After measuring, we're gonna record these transactions into journal entry. Told that multiple times. Bunch of transactions. We got entry, 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 entry. Debit, credit. Journal entry. Anything happen for a monetary consideration, a business transaction, we're gonna record that. After recording, they have a bunch of transactions, 100 million transactions. We're gonna group that into similar head: purchase, sales, utilities, anything else, your tax, anything. Many ledgers, but similar items in some one ledger, so that we can get a summarized version. What we're gonna summarize. After summarization, we're gonna put that into two things. Two things or many things. Something called profit and loss, something called balance sheet. We all know about profit and loss balance sheet. I've told you before. I just want everybody go. If you have never seen a profit and loss or balance sheet, go and search for any audited balance sheet. Go for Reliance. Search their profit and loss balance sheet. Read that. You'll not understand anything, and I can say that. But you're gonna understand. You're gonna feel that. What is that? How everybody is so concerned with that? How am I gonna take decision if their last year the profit was 1 crore? Now the profit has grown to 2 crore. Matlab the growth, there is a growth. Okay, that is after summarizing what I'm doing, I am interpreting the results. This year the growth is so 1 crore, from 1 crore there's a 100% growth, then 1 crore to 2 crore. Whoa, good, good. But their revenue have been growth by 400%. Their profit is grown by only 100%. Matlab, there may be an increase in cost also. This is what I'm doing, interpreting the result. Got it? I'm just using my brain to interpret. But how could I interpret this much? Because I have a summarized version. I was not able to interpret that decision when that bunch of transaction was there with me. But if I have a summarized version, I can interpret. I can take decision for future, for my business to grow. After interpreting, we just communicate. We communicate to everybody. Got it? Communicate to government, creditors, debtors, and etc. I don't want to repeat that. Okay. So this is the basic of accounting process. Got it? I don't feel I can explain much more than that. Any confusion, do let me know. Thank you so much. Got the accounting process. So my name is Dhruv Lakhotia, and thank you for giving me your time. Hope I'm worth it.